I'm going to show you how to mark out these levels and find these exact trades just for yourself on opening range breakouts, finding your key levels and finding these zones. This is an exact trade that we took from literally yesterday, and I'm going to give it to you absolutely for free. I'm not selling you anything. I'm giving you a complete strategy because, again, you saw exactly where we were moving into, why we were rejecting off that level, and you need to understand a few basic concepts because, again, these are repeatable every single day. And so that's really what I want to jump into. Today, we're going to be primarily going over ES and NQ because there's two great examples. And I could actually argue that going into ES was maybe even a better example with the rejection, actually the bounce, dare I say, the rejection from sellers, but the buyer stepping back in, pushing back into 57.25 eventually over the course of the day and giving us great trades and opportunities off these specific levels. Now, one of the biggest questions that I get all the time is how do I develop these strategies, develop this plan? Now, in last week's video, I went over the trade process, scaling your account. You can go find that video. It's literally the last video that I went over, posted here, and I went over all of this. Now, the biggest question was, well, Tyler, how do you determine entries? How do you get in and out of those? And today, that's what we're really going to be attacking here. I'm going to be walking you through this step by step. Again, if you want a quick, fast video that's going to get you rich instantly, this is not the video for you. I literally break down everything in detail, step by step. And you're going to be able to go through by the end of this video and understand exactly either what's going wrong or what's right with your trading so you can fix those issues. And you should always be able to identify the issues within your trading so you can go back, fix that plan, and fix that part of your strategy. I also do want to highlight this is exactly what I do. And everything that I'm going to be showing here, I'll give you a live example of how I did this literally the day before. So today's Saturday, I believe May 3rd, that was April, May 3rd. Again, this is all from, again, yesterday, as you can see here from Discord, how we were trading, everything along those lines, where I trade live, post all my options trades for stocks, and also my futures as well, where we're live on WAP every single day. The link for that is down below if you're interested. But again, this is the exact same things. And again, you'll probably see comments down below from people that are in Discord that can even testify to exactly what we're doing. So let's jump right in here. I don't want to waste too much time. The first thing that we're going to be attacking is optimal trade entries. And I think this is something that gets, for some reason, we take terminology and we attach it to someone else. And when we think of the word optimal trade entry, I don't think we focus enough on what that really means, right? We kind of attach it for some reason to ICT, but really it's just logical thinking. It's a logical thinking, okay, this is the right time to get in a trade, whether it's a, getting a retest, confirmation, etc., rather than just FOMOing into a trade. So again, I'm going to go over the process of what I look for here and then go back into examples on the chart. And again, everything that I'm going to do here is going to be derived, again, from the chart that we looked at yesterday. And then also things that I actually posted live in real time so you guys can see my train of thought, what was happening, and why we were looking for those specific things. A few of the indicators that I'll be using in this video, which I also have videos on: opening range, the 15-minute opening range breakout to the upside and the downside, your VWAP, volume, that's all you really need. Key levels are all determined as well, but again, that's just how I spot those levels, and I have videos on that as well, which you can check out on the channel. So the first thing that we do is we derive our trade plan every single day. And again, I think people think this is something overcomplicated a lot of the time. And I want to make sure that we understand that it's not necessarily that difficult to comprehend. Okay. This is a quick example of how my trade plan looks every single day. Okay. Everyone at market open, and well, not 30 minutes before market open, around 30 minutes. I like to get situated so people have an idea what to look for. NQ futures sat under 19,977 level for most of the pre-market, which was a major level. We had non-farm payrolls, which again, sometimes you have economic data. And people will say, do you trade economic data? Not at that moment, but I'll trade it at market open. I don't care. For upside, we want to mount 20,125. And again, this is before 30 minutes before market open. We're pushing for 20,210, then 20,454, which I didn't, for some reason, don't ask me why. I had a level here, which I marked out, 20,286, but I just skipped it. I don't know why I skipped that, but I posted it on there so you can see if we hold under 20,125, you're looking for that level to the downside. So I marked out the upside and the downside. I didn't go into detail on ES, but I had my levels marked out. It's basically the same overall plan. They're going to follow each other for the most part. So again, what you're looking at there. So this is my trade plan. And again, sometimes people write something super in detail, but that's really not what you have to do. Again, you mark out your levels, which I've covered a lot, and I'll have more detail breaking that down. And then I just go from the scale there. And if we're breaking and mounting a massive level, then I'm looking for the upside. If we're holding below it, we're underneath VWAP, then I'm looking for the downside. It's really not super complicated. Now, going more in detail to this, we go into something like NASDAQ. Now, giving you an example of the overnight session, right? you can see basically from, this is Friday 5 a.m., right? So you go all the way back from just pre-market overall, like you're just moving up, like non-stop. You have non-farm payrolls, you're bullish. The pre-market, like it doesn't take a rocket scientist. You're above VWAP, you're moving up, you're making higher highs, higher lows. I'm looking primarily for upside, but I also give you exactly what I'm looking for. I need to see a mount above that level for continuation. I'm not just looking to trade at open. I have an actual plan of what I'm looking for, right? And again, 8 o'clock is like right here. So you can see that way back here. This is what I'm looking for, why I want to get above it. And again, give me an example of 20,125. What's funny enough is the opening range wasn't even established at that time. It was just your previous day's highs. That's all I was looking at to break above that to get continuation into our next big key level, 1 and 2. So again, what we're looking for. And then as the day progresses, we'll go on to that here in a second. So again, we have the trade plan. We have established a bias, exactly kind of what we're looking for already. Now, if you don't have a bias established, you don't have a trade plan, might be the issue. But again, you have to reanalyze the market, go back to your trade plan. Again, you're going to notice that after everything that I say, you should not have to redo everything. I want to make this abundantly clear, okay? You should be able to, for the most part, you can quickly go back and figure out your issue. If you're constantly having to go back to square one, like if your bias established, yes, and then you mess up here, you shouldn't have to go all the way back to your, reestablishing an entire new trade plan, right? I mean, your trade plan should be pretty simple, but it should be pretty set in stone. Things shouldn't be changing, okay? Everything should be going quickly back to where your previous step was. You don't want to constantly be taking, 1 step forward, 7 steps back. Common, little saying there, right? And it's very true here. So again, our bias is established, and then now we're trying to establish that entry point for ourselves. Now, this is where things get interesting, and you start to understand what exactly you're looking for and why you're looking for it. Now, again, for here, on the previous day, what I was looking for, again, like I mentioned, previous highs. And I think sometimes we get really worked up on key levels, and we get really worked up on finding the exact spot. Something I always recommend people do is if you're struggling or if you're new, get a zone. That's my number one recommendation. Like, set a little bit of a zone, right? You don't have to, don't make a massive zone, but make a 20-point wiggle room back and forth, right? If you're off, right? So what you want to see there, and again, this is just for instance, you can go move it out over here. There's on the hour, go to the 5 minute. You're taking most of your trades off the 5 minute or the 1 minute, and you can see we kind of just mount above that level. Number one, it's your level. Number two, it's your opening range, and number three, you're above VWAP. These are all things that you want to see, right? All in tandem, all working out in your favor, and that's ultimately giving you more and more confirmation. Now, again, when I'm talking about an optimal trade entry, it's about getting more things off your checklist, right? So an example that I've used before is, imagine every trade that I'm looking at. If I'm looking at this, I'm like, okay, just opening the day, I'm like, I like the upside a lot, right? And I want to go long, right? But without having any other sort of confirmation. I consider like a 50-50 trade in my head, right? Because you're really just flipping a coin at that point. Now, when you get more instant confirmation, you're getting I take it as maybe a 5 or 10% increase to the success of the trade in theory, right? So if I'm number one, I'm over the opening range, okay, and I'm looking bullish, that's 1, right? Maybe it's 57% chance of success. Okay, we're above VWAP, that's another 7%, 64%. Now we have multiple touches of the opening range. That's another one, right? We're up to 71%, okay, and then we're getting a break of structure, right? And then things just go more and more in line. Now, again, you're never really gonna get to that 100% chance of success because things can always change. But it's all about putting yourself in that situation, and that's how you go from a trade entry to a optimal trade entry, because you're creating a more sense of structure and things on your side of that trade, right? And again, these are very simple things you can do. And if you're struggling to mark out some of these levels on your watch list, every day on your watch list, I'm going to tell you 2 things that should be on your watch list trade plan, right? Your previous day's highs and your previous day lows. Those are 2 of the most, and unless you have a crazy range, those should always be on your chart, because if you break above those, you're expecting good continuation 9 out of 10 times, okay? I mean, just go look at any trade, go look at any market. Very rarely, if you break above a previous day highs and you automatically come back down, it's typically a trash day to trade. If you break below previous day lows, and it's usually a trash day to trade if you come back in that range, right? I'm really not focused on range trading in general. That's not where I make my money. I'm very clear about that as well. So again, what you're looking at there. Now from there, we've determined our entry point, what we're looking at. So again, going back into this, well, my entry point here would clear as day. I'm looking for entries off that 20,125. Now, again, this is where some things can get tricky, and I'm going to explain here in a second as well. I don't want to jump ahead of myself. But again, you're at the very least, your lowest wick, one below that. But right here, 21,125, I mean, I honestly would want to have a bigger room for error. Because again, what do we know here? Our upside just to our next target is 20,021, right? So I mean, that in itself is around a 100-point move. I mean, even further than that, you have your next big level in your 20,028. So that's almost 200 points, 150 points, whatever it may be, right? 170 points, right? And that's really where you're kind of at right now. So you kind of want to give yourself more room for error, because again, things can just happen. You can get wicks, especially in this market right now. So that's really what you're trying to do. So you're determining your entry while you're looking at that, and then even to the point of you might even get a retrace back down to VWAP. So those are also things you have to be considering. And so we'll go a little bit more into how you can structure that as well. So you determine your entry point, and now you start moving into the sense of, wait one sec, let me erase that so you can see. But again, we start getting into the point of, is your risk acceptable? And this is where things really start to work out, and you start to think of things in a different sense, okay? And so number one, either no, it's not acceptable, right? And so what does that mean? So if my stop loss, let's say I had to set my stop loss all the way down to VWAP, this becomes like a below 1 hour trade. That's probably not an acceptable trade to take, right? Because it just doesn't make sense. It's not made. Even if you make 10 of these trades, if you lose 7, you're cutting it close. You're profitable, you're cutting it really close. So you need to understand like where you're at and what's happening, like of that sense. Now, where you can kind of structure this as well, and how I went over this is it acceptable? Obviously, yes, you can execute the trade and take it. Number 2 is you gather more data. And now what I mean by that, some people say you just stop, you don't take the trade, whatever, okay? So for instance, if you go back here, your first touch here might not have been the best trade. It really might not have been. So if I'm giving you an example here, typically I'm targeting not even just into target, but my first take profit might even be previous high of the day. Okay. So if I'm looking there and I'm setting a wick below this level here, my R is still in value, or is still working out, and the value is still there. But I have to understand that like this is again like a 15-point stop, 20-point stop, give or take. That again, with the Trump market, this could happen in an instant. So I have to be ready to pivot at any point, or know that. So maybe the risk isn't acceptable for you, right? And maybe I want to say, okay, well, I want to set these stops below 20,001, okay? And I want to open it up a little bit more, but I'm still targeting that high. Well, what you can do here is you can scale into a position. Now, in my previous video, again, like, and I've tried to build these on top of each other so people can understand of how you're doing this. Is like I'm aiming for, like, especially in the beginning, like $200 per day per trade, give or take, right? An ideal world per trade, that's one mini, $10. Awesome. Now, if you want to scale to that point of understanding your risk and where you're at, you can start doing this in a different sense. You can start going from maybe your goal is to get into a 1 mini worth of a contract, which is 10 micros. And again, you can just do that slowly. And this is something that I've really been trying to hammer home as well. So I can enter maybe two contracts here, 2 contracts as you drop down more, 2 contracts as you drop down more, and slowly scale into that position. So as I'm doing this, if we hit my stop loss, I'm not just losing a flat, whatever it may be, $400, whatever it may be. Instead, going to be losing closer, like maybe 200, 220, in that sense of the range or the target. And obviously, in this case, you'd be targeting to make more than $200 if you're scaled into 10 positions as a whole, or 10 contracts as a whole. So important to understand that when you're addressing your risk. Now, the other sense here is gathering more data, like I mentioned. And you can see the longer you hold this level, the longer you stay above that opening range, the more the sense of like you look really good, right? You start to get that sense of like, okay, this is a breakout. This is looking more and more confident. This is clearly buyers are holding you up here. And on top of that, now instead of making lower highs here, you're making lower highs. On this sense, now you're making higher lows, which is a bullish structure. The market is pushing in your favor. So you're getting more information, more data, and now you have more confidence into this trade. And you might even be able to tighten your stops up here as well if you want to enter your full position off rip. And again, just back into high of day, it's a 5-hour trade. So again, structurally, how you're looking at this, why you're looking at it, why it makes sense, and then how you're getting more information that creates a better opportunity of a trade, which again makes that trade more optimal over time as well. So again, what you're looking at, how you're looking at it. And so moving on from there, is the trade profitable? How much are you making? Yes or no. Did you win? Did you lose? Again, and I always recommend journaling. And honest to God, I messed up here. This part should also be coming right into. It should be going through journaling as well. I don't know why I did that. So you should always be journaling. And yeah, that's one of the most important things you can do. So, and I'm gonna explain why this is just so important as well, in the sense of journaling, because I think we really struggle with this. Journaling, it does not need to be overcomplicated, and I meant to add this in there as well. Is when you're journaling, I think people think that like I have to go on this long tangent, I have to say where I got out, how much did I lose. You don't have to do all that. You really don't. When you're journaling, do 2 things. why did you get into a trade? Why did you get out of a trade? And then put it like in a winner's column or a loser's column. That is it. That's all you need to do. And really what you should journal, you really need to be, this is a huge mess up on my part. You need to be journaling more of your losers than your winners, because you're going to learn far more from your losers. I learn 10 times more from my losers than I do my winners. Again, I can go over every day. I learn from my losers, right? Or I see exactly what I missed, what I could change for the next day. And I can only say this like so much and harp on this because, again, it's so big. And the more time you spend in the market, the more time you spend doing this, you'll understand it as well. But again, that's just very important for us to understand because, again, it plays such a huge role. And when you're looking at this, you're going to notice common denominators. It's something that you'll hear me mention in all my videos, is you'll see, and I recommend using the same terminology when you're journaling, like I got stopped out at, because my risk was too much or something along those lines. Make sure your terminology is the same so you can quickly search. And you don't need to be paying for a platform. You can. TradeZilla is cool, but you can also just do this on a Google Doc and just Control F, find all this information, right, as you're going through it. And when you're doing that, you're going to see exactly why you're losing, right? And it's going to happen more than once. And you'll be like, oh, wow, Tyler was right? And it's not to be, say I was right or can be conceited. It's for the sense of, look, I've been there. I'm trying to be as honest as possible. You're going to see the same reasons happening over and over and over and over. Just like your winners in your trade, this whole trade process is going to be repeatable. Like, if you're getting to one area and you're losing, that probably is going to be repeatable as well. Your same issue. I get DMs, and you guys can DM me on Twitter. I try to answer my DMs all the time. Someone commented literally yesterday. I sent them a little tip. But it's important. Like, I've been where you're at, and I just try to help you guys in any way possible. And then from there, obviously, you review and learn. And again, for both ways, winning trades, losing trades, review and learn. And again, I'm telling you, your common denominators. It's the biggest thing I can say. And with your winners, what I recommend is when you find something that works, do it over and over and over again, right? Something that you see here on YouTube, you might see the same video title that someone might do. You might see the same type of format that they do, like a video. Like even my videos, I think some of them are very similar in the way I set them up. When you see someone doing something in business, they might be doing the same marketing strategy over and over. They might be, if someone's building a home, they might build all their homes very similar. Well, why are they doing that? Because it works. People like it. People are buying it. It's making them money. In the same sense of trading, when you're making money from something, milk it dry. Only stop trying to learn something new, right? And again, it just all, in my opinion, just works together. And again, this whole process should be completely repeatable, right? And again, if it's not repeatable, you probably got really lucky and you need to reevaluate everything you're doing. But again, as you're going through this, you're going to be able to go back and forth into exactly where your issues are. And again, you're going to see this with all my videos now going forward, is that everything should be like a learning block of one step to the next step to the next step. And if you mess up here, you go back here. If you mess up here, you go back here. If you mess up here, you just should not go all the way back to your trade plan. You should be going back to what happened here or what are the underlying issues and how this is playing out. So again, this should really start to line things up. And you'll see this over and over and over. Now, I'm going to go through another trade example here as well. Is ES. This is a great one. So ES, and I actually did not take the ES trade. I trade primarily NASDAQ. But ES was honestly, I looked at it and I was like looking back over the tape and I was like, dude, ES was better. Like this was a better trade than NASDAQ. So ES actually ended up coming down towards VWAP right here, right? So ES came down into VWAP at like basically right near market open, the first 20 minutes. You can actually see NASDAQ did not touch VWAP, ES did. And you guys know I love VWAP. VWAP is one of my favorite. I think it's next to volume, it's the best indicator you can have on your screen. And a simple rule of thumb, I'm not looking to go short if I'm above VWAP. I'm not looking to go long if I'm below the VWAP, right? Unless you're hitting a major point, which there are exceptions for, like hitting the 200 SMA. That's like always a short opportunity. So again, you can see that you kind of push down, come into VWAP, and you bounce right off that. Now this was just a straight up buying opportunity, especially with the candles you had off this. And then on top of that, I typically don't like longing off the bottom of an opening range, but this would have been just a fantastic entry. Like this just would have been perfect. Like not only like did you get to push back into your opening range to the highs, but I mean, dear God, like you got above your key level, you got above everything. So ES, you had multiple opportunities here. Now ES, this is a better example because again, this is more of tracking more data. So I can see early on in the morning of getting above your opening range. Unlike NASDAQ, look how you hold above your range all morning, right? ES doesn't. So here I think you have to wait and get more data because I want to see like a strong 5-minute candle close, multiple above the opening range before I start slapping it or any type of support and resistance that we're getting over, right? And so here you don't really mount it, right? You get above it and you just wait through it for like it seems like an hour, right? And you eventually mount. Now, where things get interesting is having your key levels and knowing what to look for. So 5690. So zooming out so you can see where that level comes from. We go all the way back. I mean, again, look how far back I have to go. Against your previous like little low, your flip back here from literally July 2024. You can see the SR flip going back as well. So again, just a massive level that we had. You can see where it comes from. Again, you can do your data, go find your key levels for yourself. But that was a big level that I had. And so you can see that we start to pin around that area, right? And again, if you need to, you can use a zone at those levels. So I marked out there as well for you. So again, you start getting wicks below up, but you can see buyers keep holding you above 5690. And you don't even get a retest of VWAP, which in my opinion, if we're not even going to push down to VWAP, buyers are showing up at that level. And this is like, okay, I need to start paying close attention. And so you start to get back above that level, and then ultimately you push up, get back above the opening range. So this gives you an opportunity like, okay, I got more data. And things are interesting here. So the next time I get, we start bouncing off this level, I can do two things, right? I can either be a little bit more aggressive and I can buy near that key level and try to put stops below VWAP. I'm taking a bit of a chance, but I know if we hold and we break out, we're going to get that push into our level here at 5725. And you actually see throughout the rest of the day, like you end up getting a push. You end up getting like a perfect push right into it up here. It was crazy, right? But anyways, it was all there, marked it out. But great examples of what's happening. And then even going through the rest of the day, another big part is you see where you're kind of finding resistance at here. And basically 5700 flat, 5702. You can actually open this up a little bit higher to that little high before you broke out. And then look what happens. You get like multiple trades off this later on throughout the day. So not only do you break up, you come back down, you push up. You come back down, you push up. You come back down. So these are just scalps you can take throughout the day as well. So giving you those trade setups, and again, it all just comes back down to the trade plan and then sizing into how you like them as well of what you're looking for throughout the day. But again, gives you all those opportunities. One of the biggest things that I see people asking is, and I don't think people are honest enough here of like going into the pros, going into the cons. And I want to like just these are things that I see happening all the time with myself. Okay. So pros and cons of entering a trade on a breakout impulsively, FOMOing. And again, I think FOMO gets a bad rep sometimes. Like if you have like an ascending triangle or a bull flag and you're breaking out, do you enter immediately or do you wait for a retest of highs? Like what do you look for? I prefer to wait for a retest unless you're already like bull flagging and retesting a high, then that's different. But ideally, I want to see a breakout and a retest of a level 9 out of 10 times. So things that I'm always looking for. And I'll go more into the cons first of both. So impulsively trading, and again, there's pros and cons for each, right? So impulsively, number one, you're increasing your risk, which I hate doing, right? That's the opposite of getting more things off my checklist to make sure I'm winning a higher percent of the time. Lack of research, you probably don't have a trade plan or it's not following your trade plan. Emotional decision making speaks for itself. If psychology is something you're thinking about all the time of trading and you're FOMOing into a trade, then like you're just doing what you don't want to do, right? Higher transaction cost. You might be, if with futures, not that big of a deal, but the options you're paying a higher premium typically. You're not. If I wait for a retest, I'm gonna get the contract cheaper, right? Or even with futures, if I wait for a retest, I'm gonna get more of a profit margin to the upside. My risk R values are gonna be better. Potential for losses, obviously, on a fake out, traps, etc. The cons of waiting for an optimal trade entry, right? You'll miss out on opportunities. Analysis, this is the big one I see people struggle with, and I struggled with this too in the beginning. Like, right, waiting for a perfect set, like okay, this is the 100% I can't lose, and that trade might never come. Okay, market changes, structure. You might get your breakout. You might miss out on an opportunity. Like, okay, I want one more touch, but you don't get the other touch, or I want the touch, but you never get the touch. So things that might happen. Time consumption. I don't think this might happen with options. It may be. But when you're going into this, I don't need to take 20 trades a day. I look for 2 to 3 trades, ideally 2 to 3 setups, right? So again, for some people, they might want to take more trades. They might want to scalp more. They might only have a certain time limit, like maybe the first 2 hours. And they might overthink that problem, the strategies and the problems that are there. So potential overthinking, like I said there as well. Going over here, the pros. And again, I think it's important that we look at both. And I try not to be biased, right? When you're impulsively, you're quickly getting in, quickly getting out. And I think that this quick decision-making can line into your optimal trade entry as well. I don't want to say that right now. I think this can play a part in both. And I think that if you're waiting for like 2 confirmation signals, I mean, then you're quick decision making as well. But you got to be like kind of a little bit impulsive on there as well. Opportunity seizing, trading a breakout. Sometimes you won't get the retest. Sometimes you'll get the big breakout, right? The emotional thrill. Some people like the emotions with it. I don't. I want to be stoic. I want to be able to sit there, drink my coffee, and just relax while I'm trading. If I lose, I lose. If I win, I win. Cool, right? Options, I think there's more emotion there because bigger trades typically. But again, for my scalping, I don't want to have the emotions. Okay, potential for high returns. Again, like you break out and Trump announces something, you might see a 200-point candle, right? I'm not looking for a 200-point candle with my trade plan, right? Great, optimal trading. You're looking for informed decision making. And again, you're going to notice the difference here is everything with the optimal side is just repeatable, right? It's structured. It's a plan. It may not sound as pretty, but it's like you're getting it over and over and again, right? It's a little bit boring, right? Better risk management, higher probability of success, strategic planning, everything that I said here is everything that you just heard back here. This is just repeating everything that I just said of why I'm looking for it and everything that's going into it. Okay, but guys. Also, too, I just want to say if you want to get more information about like how I'm scaling futures, etc., like then the previous video I covered goes over this in depth. How I'm looking at this, going from $200 a day to $2,000 a day. Everything to look at there as well, and kind of the roadmap. But again, kind of my headspace, how I look at this. If you have any questions, please let me know. This is just how I'm looking at the market, how I'm trading every single day. I appreciate you guys. I'll see you next time.